Hello everyone, welcome to our channel. Our goal is to amass and analyze investment influencers' opinions, pass on the aggregated market sentiment, and our interpretation of their investment strategy. Welcome to our market outlook briefing. Today, we delve into a fascinating split in expert opinions regarding current market dynamics. On one hand, we see resounding optimism for the artificial intelligence sector, driven by unprecedented adoption rates and integration into enterprise workflows. On the other, a strong undercurrent of caution emerges from a newly hawkish Federal Reserve and stark warnings from value investors about an impending market bubble, particularly in speculative tech. We'll also touch upon the foundational importance of individual financial planning in this complex environment. Kicking off with the macro landscape, Jeff Talk Stocks provides a critical interpretation of the recent Federal Reserve meeting and the inaugural speech from Chairman Kevin Warsh. Warsh has made it clear he's a reformer, signaling a hawkish stance with potential future rate hikes, moving away from previous expectations of cuts. His focus is squarely on bringing inflation back to the 2% target, which he notes has been consistently breached. He advocates for a more data-driven approach, reducing reliance on outdated metrics and shifting market attention to economic fundamentals rather than Fed rhetoric. This new direction initially caused market rallies, particularly in the AI sector, but subsequently led to pullbacks as investors digested the implications of a potentially tighter monetary policy. The AI market stands at the heart of our analysis, presenting the most significant divergence in expert opinion. On one side, Alex Kantrowitz and Jeff Talk Stocks highlight robust, sustained growth. They point to AI as RAMP's fastest-growing spending category, with models demonstrating strong user stickiness and companies adopting multi-vendor strategies, indicating a clear justification for investment. Kantrowitz even debunks the SaaS apocalypse narrative, suggesting AI will augment rather than destroy traditional software. Conversely, Sven Carlin issues a dire warning, labeling the current AI market as the craziest bubble ever. He cites astronomical valuations, like SpaceX's $60 billion acquisition of a nascent AI coding company, and projections of over $500 billion in AI debt issuance by 2026. Carlin believes the market is exhibiting pure speculative gambling, drawing stark parallels to the dot-com bust of the late 90s and predicting an imminent explosion. Let's dive deeper into the specific players and sectors shaping this dynamic AI landscape. In AI models, Anthropic has surprisingly edged out OpenAI in business adoption, prompting OpenAI's recent price cuts. Google's Gemini, leveraging its vast ecosystem, is positioned as an underrated player. The rise of open-source alternatives like DeepSeek underscores a growing corporate focus on cost efficiency. On the hardware front, NVIDIA remains central, with its incredible growth a double-edged sword, seen as a solid bet by some, but a prime example of bubble inflation by others. Semiconductor equipment giants like ASML, KLA, and Lam Research are consistently highlighted for their robust fundamentals. Meta is making aggressive moves into AI-powered wearables, demonstrating Zuckerberg's direct influence on strategic pivots. And finally, in the more speculative realm, SpaceX's valuation targets and acquisitions are generating both excitement and significant bubble warnings, alongside other emerging or high-risk AI-related tickers like WRT and ARM. This brings us to a fundamental divide in investment philosophy. Sven Carlin robustly champions value investing, advocating for a focus on intrinsic value, equity growth, and disciplined capital allocation. He draws inspiration from Warren Buffett's early observations in Las Vegas, where Buffett realized the true wealth was made by the casino owners benefiting from mass speculation. Carlin believes we are in a similar casino market, with immense capital pouring into speculative ventures and daily options trading. While Jeff Talk Stocks acknowledges the market's enthusiasm for high-risk tech, Carlin explicitly warns that such cycles inevitably revert. His strategy is not to short the bubble, but to consistently apply value principles, ensuring preparedness for the inevitable correction. Shifting gears from broad market trends to individual financial empowerment, Humphrey Young presents a compelling argument that the single most underrated financial decision is where you choose to live. He uses the Swiss-Italian arbitrage analogy to illustrate how earning in a high-wage environment and living in a lower-cost area can dramatically boost wealth. Young emphasizes the compounding effect of securing a high starting salary in your 20s and 30s, as this base anchors all subsequent earnings. Beyond income, a high-opportunity city provides invaluable networking and career opportunities that can be more financially beneficial than salary alone. He starkly warns that staying in a low-opportunity city out of comfort is a wealth killer that nobody sees, suggesting that temporary relocation for career establishment can pay dividends for a lifetime. In conclusion, the current market presents a fascinating duality. The AI sector is undoubtedly experiencing explosive growth and rapid adoption, driving innovation across industries. However, this excitement is tempered by strong warnings of a severe bubble, reminiscent of past market manias, especially with a newly hawkish Fed signaling potential for tighter monetary conditions. For investors, this means navigating a complex landscape that demands both an appreciation for technological advancement and a disciplined approach to valuation and risk management. Beyond market movements, the fundamental choices individuals make about their careers and where they live can have an equally profound, compounding impact on their long-term financial success. The market remains dynamic and volatile, demanding adaptive and well-considered strategies for the foreseeable future. Okay, that's it for today. If this is of value to you, please like and subscribe. Thank you for watching. We'll see you again next time.